Today we're going to talk about a topic that we actually address on Find My Way Home all the time, right? You know, the reason that the channel was put out is because we want to tell and help consumers that are told wrongful answers or been wrongfully denied at other lending institutions because they don't know the guidelines. And this is one of those guidelines we're going to cover today. Hello, this is David Xie with the Xie Mortgage team. This literally happens every day. And this is why the Find My Home network was kind of founded, right? There are debts that are not considered by FHA that are considered by other agencies. And these are some debts that you should really know about when you go into your mortgage qualification. Number one, we have the ability to check our credit every single year. Go to annualcreditreport.com. It's free for you to check, and it'll allow you to know what's on your credit report, what should not be on your credit report, and it gives you the ability to dispute these things, right? However, if you look at your credit report and you know that there are bills on there that you may be unsure of and you're looking to purchase a home, be sure to know these things because, you know, going through the process is already daunting enough. And every single day we talk to customers that are constantly told the wrong thing, or they're like, you know, I've tried so many times, I just want to give up, right? But you shouldn't feel that way because the winners always go through. They always continue pushing on. They always look for the right answers. They always want to learn. They always want to continue to learn. So I want to make sure that you understand that when you go through an FHA loan, that these debts should not be considered when qualifying for a loan. So number one is a medical collection. That should be universally known. However, there are now 3 million NMLS numbers. So these are people that are claiming to be licensed loan officers. And that's not even counting your banks that don't require your loan officers to be licensed. So medical collections are not needed to be counted. Then we have your federal, state, and local taxes that are delinquent. You may be delinquent on these taxes and no payments are literally required for you to qualify. We also don't need to count any automatic deductions from your savings when it's not associated with any type of obligation. FICA contributions, anything that's coming out of your taxes, we should be qualifying you based off of your gross income, not your net income once everything comes out. Any collateralized loans that are secured by depository accounts. So we've heard of secured loans and unsecured loans, right? Unsecured loans are things that are not like that have no collateral. So let's say your credit card, or maybe you went to the bank and you needed some extra money. If it's not secured by your vehicle, or even in this case, a depository account, then, you know, you don't have to count it. So a lot of times we'll use your 401ks or your TSPs and take out a loan, and we don't have to count that debt against you, and we can use that towards down payment. And that's going to be another video that we're going to talk about, is when you take out that money from those secured accounts. The beauty of it is that you're getting interest, and the interest that you pay back monthly to your retirement plan actually goes back to you on a lot of these plans. So definitely look into that. Utility payments are definitely not counted. Your child care on FHA loans is not counted. However, it is counted on VA loans for residual income. So make sure you know about that. None of your community costs, none of your union dues that are required based on your type of employment, none of the insurances other than property insurance. So if you have life insurance or you have any other types of insurances, those should not be considered, and those should not be documents that you provide to your loan officer to confuse them further. Any open accounts with zero balances. If it's zero balance, we're just not going to count it against you, right? And then finally, any voluntary deductions that are not associated with any type of obligation. So if you have child support, yes, obviously we need to count it against you. But if you're just really being nice and you want to send, like, you know, $1,000 to your child who's in college, we're going to ask you what it is. But if you tell us and you write it out and sign it, and you're like, hey, this is just a non-obligatory distribution or deduction that comes out of my account, it should not be counted. When you're going through the loan process, it's daunting enough. Find a loan officer that has done enough loans for them to know it. Find a loan officer that does loans on a monthly basis, and multiple loans, hopefully. And definitely check with your wholesale lender. And I'm all three of the above. So if you have any other questions or concerns, or you'd love for me to help you out, please feel free to give me a ring at 757-478-8493. And this is David Xie with the Xie Mortgage Team. Bye.